All right, everybody, we are back to talk about AI stocks yet again, specifically Bitcoin miners that became some of the most dangerous AI stocks on the market. You guys know I've hit on a lot of different portions of this AI build out. If you've been watching my most recent videos, I've been giving you a ton of different ways to invest here through AI memory, through cooling systems, through semiconductor, through network testing. And there's just so many different things to cover in and around the AI build out. And this video is going to be a special one. You're going to want to stick around until the end of the video. Also, if you're just finding my channel right now, make sure you go back and watch a few of the most recent videos where we highlighted a number of different stocks that I really like moving forward into this decade as this AI build out continues. I talked about it in one of my most recent videos, $725 billion. That's the CapEx spending for four massive companies. Of course, those four Mag 7 companies that recently reported earnings on. I don't want to give too much away from that because I want you to go back and watch some of those videos. But let's dive into exactly what's going on because, on paper, it looks as if this entire AI build out is done, right? It feels like a bubble, but a company just reported earnings today, and revenue missed. Earnings per share missed by a mile, negative 28 cents versus an expected negative 8 cents, and the stock is up 21%. That is Cipher Digital, ticker CIFR. Write this down. We're going to highlight some other things that you're going to want to write down in this video too. But let's start with the backstory because the company's transformation is basically the blueprint for the entire sector. Cipher Mining, now rebranded as Cipher Digital, started out as exactly what the name sounds like. They were a Bitcoin mining company, which, high risk, high reward. I love Bitcoin in its own right, but I wasn't never really big into the mining stocks until they pivoted. They had rigs in the Texas desert, hashing away, minting coins, pretty boring, honestly. But here's what happened. As Bitcoin miners, they built out massive power infrastructure and land in low-cost energy states like Texas. And then they had the realization, well, the same infrastructure that mines Bitcoin is basically a data center. And hyperscalers like Amazon and Google will pay you to use it. So the company officially changed its name to Cipher Digital back in early 2026, earlier this year, signaling the transformation is complete. They are now an AI infrastructure operator. So just another way to get exposure to this AI build out. Well, they started leasing out data center space to hyperscalers for high performance compute. And where it gets interesting is on paper, today's Q1 2026 earnings, they looked ugly. Revenue came in at 35 million, down sequentially from 60 million in Q4 of last year. Earnings per share missed badly. So why is the stock up 20%? Because investors are not trading the quarter, they're trading the pipeline. Cipher Digital outlined a robust pipeline of data center projects with expected revenue commencements later in 2026. And this isn't the only company doing it. On the mining side, they mined 346 Bitcoin in the quarter. Okay, cool. But management forecasts EPS improvements in subsequent quarters with projections reaching positive 36 cents by Q1 2027, meaning they expect to flip profitable within a year. Analysts also predict the company will be profitable for full year 2026 here, with consensus estimates around 0.09 EPS. The market's basically saying, hey, we don't care about last quarter. We care about what this thing looks like in the next 18 months. Then, rather than looking at what's happening now, they want to know what happens when those data center contracts really kick in. And the kicker is Cipher's up 700% versus the S&P 500's 35% gain. The 52-week range from $2.32 all the way up to $25.52. This has been an absolute monster. And you guys can see what happened on the charts today. Let me share my screen with you guys real quick here with Cipher. And I do have exposure to this directly, and I've got exposure to it in some ETFs. You guys can see my average cost earnings per, average cost is right around $17. Here it is. I'm up, 26% on this so far this year, outperforming, the S&P 500 here year to date. And I'm excited about this. I'm excited about this entire build out. Yet another reason to be excited about the AI build out. And so you got Cypher up 20%. You got another big player, Iron. They're another vertically integrated Bitcoin and AI data center operator. Closed today up over 10% after announcing it's going to acquire Mirantis to expand its AI cloud capabilities. And Iron also recently energized its 1.4 gigawatt Sweetwater One data center site in Texas. So you got Cypher up 20%, Iron up 10%, both former Bitcoin miners, now AI infrastructure landlords, both with hyperscaler tenants, knocking on the door. And the playbook's the same. You already own the land. You have the power connections. The hardest and most expensive part of building a data center is over. They've already got that cleared. You already know how to run high density compute at scale. So you pivot from mining coins for yourself to renting your infrastructure to Amazon, Google, Microsoft, companies that are spending hundreds of billions of dollars. We talked about that in recent videos, 725 billion just this year spent by these companies alone. And this is what I call the AI land grab. And the window to get in at reasonable valuations could be closing fast. Like, let's zoom out for a second, because to really understand why these stocks are moving, you need to understand the macro. The bottleneck for AI is no longer chips, it's kilowatts, it's memory. And hyperscalers are racing to build out massive data center clusters. And that has shifted the constraint from semiconductors to power and physical infrastructure. Think about that. Utilities, pipeline operators, data center real estate, things that used to grow at 3% a year are now growing at 15 to 16%. Because every AI server needs power, cooling, and a place to live. Even Vertiv, a company that I've talked about many times on the channel already, they make power management and thermal management solutions. They surged 270% over the past year, beating out NVIDIA and Broadcom. That's why I've been telling you guys there's tons of stocks outperforming NVIDIA. NVIDIA is still a great name, great player. That tells you everything about where the money's flowing right now. The companies that own the physical layer of AI, the land, the power, the cooling, the connectivity, the network testing, they are becoming the most valuable real estate in the world. Now, I'd be doing you a disservice if I didn't talk about the risks. There's obviously risks. Valuations. At least one major analyst, and I'm sure there are more, says there's major red flags with a stock like Cypher, maybe overvalued relative to its fair value estimate. Execution risk. These data center projects are complex. They've got to deliver. Any delay in bringing capacity online pushes revenue and profitability further out. Although I would argue that this is not a demand problem. This is a supply problem if it happens. And obviously, if hyperscaler AI spending slows down, if Microsoft or Google pulls back, these companies feel it immediately, no doubt about it. So it's not a set it and forget it play, but it's certainly a momentum play. And I think the momentum is going to push us higher. I think there will be little corrections along the way, but make sure you guys do subscribe to the channel, because I'll continue to be talking about, when I'm maybe taking some profits or getting out of trades or rotating. There's going to be a lot to like later on this year, I think. But the AI infrastructure rotation is real, and you can't ignore it. It's happening today. It's not just about NVIDIA anymore. The picks and shovels play has evolved. It's not just the chips. It's power, it's land, it's cooling, it's connectivity, it's network testing. The names I'm watching in this space right now, you've got Cypher, you've got Iron, you've got TeraWulf, you've got Vertiv, you've got JBL, which is one I mentioned. And I mentioned about 8 to 10 more in some previous videos. So make sure you're writing all this down. Make sure you're getting all this, because the theme connecting all of this, it's the physical layer of AI is becoming the most valuable real estate in the world right now. And most investors are still looking at the software. It's no longer about the software, not just software alone. So if this video helped you see that, hit subscribe, drop a comment with which of these names you're watching right now, and I'll see you guys in the next video. Thank you guys so much.